I think these concerns and tensions are here to stay for probably for the prolonged run. And so we should anticipate to have these kind of volatility moves, concerns around those headlines for the foreseeable future.
What is the most important volatility driver in your mind? Is it what's happening here with the U.S. markets and technology? Is it geopolitical risks elsewhere? Is it the election in the U.S. coming up? Or what exactly is probably the biggest blip on the radar?
As you said, look, you listed quite a few. There are a lot of events on the horizon that could be a concern. I think for us in the immediate term, concerns around the US election is probably going to be the one that creates most volatility. The thing is that, look, typically we always see that. We all see volatility picking up as you get close to the elections and in the immediate aftermath. But if you look 2 or 3 months down the line after the election, actually things usually return to normal. They return to what are the fundamental drivers. And I think in the last 6 or 7 months, what's been the key driver for markets has actually been the Fed, all the stimulus that they've been providing. So as long as that's in play, we should see things smoothing back down again a couple of months after the election passes.
Seema, the Fed has been a factor in these discussions about markets rallying for quite some time now. They were still there. They're still in place right now. Why exactly, given the Fed and central bank intervention all around the world, do we still see markets as volatile as we've seen over the past week here in the U.S.?
It's a good point. I think one of the things is with the tech rally. That has been the key the key sector that has performed very, very well. It's been a very narrow rally. And because technology has performed so well and so sharply higher, there have been a lot of skepticism about how much further it can go and if that momentum can be maintained. With valuations very, very expensive, I think we should have anticipated some froth to be blown out of from that market. But I think that we should actually have a fundamental growth for the technology sector continuing. This is not the end of the tech bull run. It just had a bit of a hiccup.
So if it is then, in fact, not the end of it, should investors be seeking opportunity buying dips in those same high-flying momentum tech stocks? Or are there other places in the market that represent better opportunity rather than some of those perhaps richly valued technology shares?
That's a really good question, and it's something that our clients are asking us all the time at the moment. For us, I don't think this is the opportunity to buy technology. I think if you've got exposure, and hopefully you do, that allocation should not be reduced at these levels. I think what investors should be doing, though, is keeping their eyes open for the new opportunities. And look, as we see a recovery start to firm, you're going to see cyclical sectors doing a lot better. As people try and return to normal behavior, you should see some of those sectors that tend to do better in economic recoveries. They should be the ones that start to perform pretty well. So I think we just have to be aware of the opportunities that are rising. But look, it's important to maintain some kind of exposure to technology because that is a secular growth driver going forward. Firms, households are going to remain very reliant on technology going forward. So it's going to be important to maintain the kind of heavy, hopeful allocation that investors have already had.
Seema, just a few moments left here. Are the best opportunities that you're seeing inside the U.S. or outside the U.S.?
Actually, we're starting to like more and more outside the US. And I think actually emerging Asia is probably the favorite region for us. We see that as growth recovery continues, it should play well into emerging Asia. They also have a very big tech sector as well. So we have to be cognizant that if you're looking for tech, US is too expensive for you. Emerging Asia still has those opportunities too.